Chapter 18 continued. Additional $500 exemption. Following individuals: widows or widowers, surviving spouse who has not remarried, a legally blind person, non-veterans who are totally or permanently disabled. Disabled veterans exemption. Veterans who are at least 10% disabled by military service connected misfortune are entitled to an additional $5,000 exemption on their homestead or property. Special exemption for quadriplegic. A homestead owned by a quadriplegic is exempt from taxation. Also, low-income individuals with total or permanent disability may be eligible. Order of cumulative homestead tax exemptions. Base $25,000 homestead exemption first. $500 exemption for widows or widowers, legally blind or non-veterans who are totally and permanently disabled. $5,000 exemption for disabled veterans. Additional $25,000 homestead exemption. Finally, the third. And Florida's Greenbelt Law. Florida law authorizes county property appraisers to assess agricultural land by a more favorable method than that used for other properties. Save Our Home Amendment. The Florida Constitution caps how much the assessed value of homestead property may be increased in a given year. 3% annually based on assessed value for prior year. The percentage change of the Consumer Price Index, CPI, for the preceding year, whichever is less. To calculate the dollar amount of property taxes owed, the taxable value of the property is multiplied by the appropriate tax rate. The tax rate is expressed in mills. A mill is 1/1000th of a dollar for 1/10 of a cent. There are 1,000 mills in a dollar. Special assessments are one-time taxes levied on properties to help pay for some public improvement that benefits the property, which is, if it was 100 feet of street times $24 per feet would be $2,400. You would times that 2,400 times 0.70, which would be the owner's share cost, which would be $1,680, but that would be divided by both sides of the street, which would be $840. Property taxes constitute a lien superior to all other liens on real property. The city or government is responsible for the cost of its day-to-day operations and must collect delinquent taxes in some manner. To do this, property tax certificate and the amount of taxes owed is issued for delinquent properties. They start at 18% and go down. Principal residence. Tax laws are designed to encourage home ownership and give preferred treatment to taxpayer who owns their residence. Mortgage interest. Interest paid on mortgage loan on the principal and second home is deductible. Property taxes. The annual property tax paid on principal and secondary homes are deductible. Interest on home equity loan. The interest paid is deductible if the loan does not exceed $100,000. Mortgage origination fee points. Points are deductible in the year they are paid, unless they are paid when refinancing a loan. In such cases, the points must be deducted over the life of the loan. The IRS allows homeowners to exclude up to $250,000 of gain, $500,000 for married couples filing a joint return, realized on the sale or exchange of a principal residence. Purchase of real property from foreign sellers. To prevent foreign sellers from avoiding the payment of taxes due on sale of real property, the IRS requires that buyers withhold 10% of the gross sale price, including cash paid and any debt assumed by the buyer. Straight line method depreciation is calculated using straight line. The IRS has currently established useful asset life of 27.5 years for residential property and 39 years for non-residential income-producing property. Installment sale method. Under installment sale method, the gain is received over a number of years and the seller recognizes the gain for tax purposes over the same period. Like-kind exchange. Real estate investors can defer paying taxes by exchanging real property. The income tax is deferred, not eliminated. A like-kind exchange enables a taxpayer investor to realize the benefits of investment and property appreciation immediately while paying taxes later. To qualify as a tax-deferred exchange under Section 1031 of the Internal Revenue Code. That's the end of Chapter 18.